Welcome to episode 22 of Urban Chart Chats with me, William Mills. In this episode, we're going to talk about how to stop losses. So let's get to it. Number one, how to do it. You're going to go to the sell section of your brokerage accounts. And in that sell section, you're going to see a little subsection that's going to give you options like limit sell, stop losses, and a couple more complex ways of selling that we won't address today. We'll keep it pretty simple. I'm also only addressing limit sells and stop losses because those are the ones you're going to use the most when you're day trading and swing trading. So, number two, let's address the differences. Limit sell is at or better. Remember, limit sell is at or better. So it's at whatever price you set it at or better than that price. The other difference is limit sells are usually set right after you buy the stock. So for example, you buy a stock at 10 and your goal is to get to 12. Once you buy it at 10, you set your limit sell at 12. So once that stock hits that 12, it sells off automatically. Now the better part is if that stock gaps up and moves up the charts to 12.15 or 12.20, you get the better price. Now a stop loss is exactly what it says, stop loss. Now I don't like or advise people to use the stop loss the way that other investors use it because a lot of times I think you lose money doing it that way. And I'll address that here in number 6. But let's just talk about stop losses right for now. Exact price or exact number, whichever have you. So you're going to set your stop losses at an exact price or an exact number. Now how to do it is you buy your shares at $10. Your goal is to get to 12. But the stock is playing around 11 or 11.50. You set a stop loss halfway between where you bought it and your goal. Remember, you buy at 10, your goal is 12, so your halfway mark will be 11. You set a stop loss there. Only after it crosses that 11. And I would say set it maybe after, for these examples, 20 cents after it passes the 11. Give yourself some room for volatility and movement. But what happens is you're protecting your profits on the way. You still think that the stock will go to 12, but your stop loss protects the profits made so far. So at USM, I call it lock the door. And I'm constantly telling my members and stock waivers how to lock the door. And I think that is how they're making more profits day to day on their swing trades, and instead of wasting day after day. Because what happens if you buy at 10 and your stock is going to go to 12 eventually, but it always stops at 11.50 or 11.60, 11.70, and then goes back down to the 10. You just missed a day or 2 days or 3 days of profit that you could have pocketed just because it didn't hit your exact number. That's why I call it lock the door, because once you pass a threshold, you're locking the door behind you. So none of your profits can escape, and you don't have to wait again another day to build back up stuff that you already built. Now, let's address number 6, which is stop losses below entry. A lot of investors do it. Most of them do. They'll buy a stock, like I said, example 10, and then they'll set a stop loss 10% under that. What happens if the stock has volatility, which is very natural, or if the stock is flexing within a range and it automatically triggers your stop loss? You lose that money. And it's bad because you still have faith in that stock. the stock is still going to work out. It's just at that time, it took a dip. So that's why I don't set stop losses below my entry points. I look at my entry points like my confident level. And how do you get to that point? Just by doing your due diligence. If you believe in the stock that much that you're going to buy into it at that price, then you should not have any stop losses under it. Because the price you bought it at should be the level that you expect is the floor or near the floor, and will go up after that. And in your mind, you already understand that there's range of motions. So that's why I only use the lock the door process to protect profits made. And that's what a stop loss is. It's a lock the door to protect your profits. Or I can do a limit sell. If I'm walking away from a stock, I'm not watching it all day. I already have a set plan. So once it goes to that amount, it sells by itself and I made my profit. So hopefully this video helped explain to you guys a little bit how to do your stop losses. If you need more information, go to urbanstockmarket.teachable.com. Check out all the other videos of Urban Chart Chats. You want to become enrolled into the school, pick a course you like. They're only $24.99. And if you're ready to become a stock waver and start learning and earning, sign up to Stockwave Network for only $7 a month. I'll see you guys on the boards on the next Urban Chart Chats.